Hello, I'm Jay Hirsch, Director of Administration of Columbia's ERM program. Welcome to tonight's panel, Geopolitical Risk, Navigating Uncertainty in a Complex World. I'd like to tell you about some of our upcoming events. We have our ERM seminars every Friday and Saturday morning through the end of the semester. And on April 4th, we have our panel on managing conduct in a digital world. And now here is tonight's moderator, Bob Kostakopoulos.
Thank you, Jay. Hi, everyone. Thank you for coming here today. My name is Bob Kostakopoulos. I'm Deputy Program Director and part-time lecturer. We have our panelists here who are going to introduce themselves, and then I'll say some introductory remarks, and then we'll go into a question and answer session with our panelists, and at the end we are going to open it up for Q&A with the audience here as well as on the web. Karen, could you give a brief introduction of yourself?
Sure.
And then Adam.
Well, thank you for the invitation. Thank you all for coming out in the afternoon. My name is Karen Young. I'm at the Center on Global Energy Policy at the School of International Public Affairs, just down the street. And I'm a senior research scholar there. And my whole career has been in academia and think tanks. I'm a political economist. My PhD is in political science. Actually was a graduate student at Columbia 25 years ago in the political science department. And the work that I do is basically focused on how governments embrace massive economic change and how governments who are increasingly reliant or traditionally reliant on resource revenues manage change and diversification efforts. So I focus mostly on the Gulf states, the GCC states, and the Middle East. I didn't start out as an Arabist. It was somewhat by chance, but that's what I've been doing for quite some time now. And the kind of connection to geopolitical analysis is that the states that I study are becoming increasingly important. Maybe you define them as middle powers or as states that are tremendously dominant in our energy sector, both in legacy fuels but also in renewables, and this kind of repositioning of what we think of as states as alternative models of development. So that's a lot of the work that I do. I live in Washington, D.C. I also teach at the State Department's Foreign Service Institute, so I help train diplomats who are headed to the Gulf. And I'm also a senior fellow at the Middle East Institute.
Good. It's a hard act to follow. Good afternoon, everyone. So Adam Barbina, I'm based here in New York, and I work for Ernst & Young. And we have a team of what we call our Geostrategic Business Group, which is a group of kind of strategists, former policymakers, people that have been in government. And we help our clients think about geopolitics and political risk and what it means for their business. My background prior to coming to that was I actually started with the firm right out of my undergraduate experience in M&A, so I have work in kind of financial and kind of commercial diligence, helping companies buy and sell, and also go into new markets. And so post grad school, my desire was to kind of marry up both kind of the commercial aspect with kind of international affairs and bring those two things together. Where I think we're living and breathing kind of the integration of those things, not just in this administration, but over the last couple of years. Thank you for having me.
Thank you, Karen and Adam. Okay, so why geopolitical risk, right? So we think of, at least in my part of the universe, geopolitical risk as really a magnifier risk, a risk that exacerbates other risks, such as strategic risks, operational risks, financial risks, insurance risks. And just like any other risk that we study, right, we are interested in measuring, knowing what the level of the risk is and what the direction is. So geopolitical risk may be a ban on exports, which may not be a big deal, but it could be getting ready for war, which can be a big deal. So we're interested in also in the direction of the risk. That's what policymakers, decision makers are interested in. Are we escalating bad news or de-escalating good news? So because of that, geopolitical risk management, which is what you use to measure and control and so forth, is a strategic imperative, right? Because a geopolitical risk that you have not treated in some way, mitigated in some way, can derail your strategy. And that can be quite a bad thing for your organization. We know geopolitically stable regions do much better than those who are not stable geopolitically. Just to fix ideas of how bad things can get, World War II was a horrible geopolitical event, right? But the post-War II period has been quite stable in terms of thanks to the infrastructure that was put in place, the United Nations Charter that basically mitigated geopolitical risk and allowed small countries especially to feel free of the pressure. In addition to that, you had the general agreement on tariffs and trade, GATT. That's a very important pillar because it promoted free trade, economic growth. And it morphed into the World Trade Organization, which also provides a forum for companies like Boeing and Airbus, a US company and a European company, that the competitors that can file, let's say, complaints against each other and have the WTO resolve those differences without the governments being involved. It sounds like a very good system there. So I want to conclude by saying that organizations that incorporate the geopolitical risk analysis into their enterprise risk management programs become more resilient and have a better chance of surviving mean geopolitical events. So with that, I would ask our panelists to tell us how you got into geopolitical risk analysis. So, Karen?
Yeah. Do you want to talk about methodologies after?
Yes.
Okay,
I mean,
I won't launch into that just yet. So, I'm sure many of you, who's in political science? Who's in the business school? I see in the audience like what your framing is, what your background is. We have different ways of kind of entering the study of politics and our global economy. Everybody's going to come at it from a different perspective. We'll talk more about kind of the methodologies that different disciplines and practices use. But I think for me, the core questions that have motivated my academic work have really been about how governments being kind of the focus of the actor, how they create change and how they adapt, particularly to economic crisis. And so in economics, there's a big literature on kind of institutions, and that is kind of how I have framed these questions. What Bob's mentioning, of course, is our kind of post-war period is all most of us know, right? We have existed in this framing, and we're now living in a much more unsettled time. And so I think the job of academics, of people who are working to advise firms, is we're also going to have to change. And so, don't suppose that everyone has the answers. No one does, right? This is very much a kind of unknown territory, which is really unsettling. But the background that I have is just that I actually started, when I was a graduate student at Columbia, I was interested in Latin America and I'd lived in Ecuador after my undergraduate degree and did a master's program there. And it was during a period of tremendous financial crisis. There was both a banking crisis and a currency crisis. There was a military coup. It was my first experience with tear gas on the streets. And And I just wanted to understand, how is this country going to recover? What resources exist for them? What kind of financial institutions exist to lend them money? And then how will they ever repay it? And then how do governments make choices about what they spend in terms of servicing the needs of citizens versus servicing debt? Ecuador is also a country that is reliant on oil exports, and at that point was a member of OPEC. And that's how I kind of got into this world and understanding basically the challenges, particularly of developing economies, their access to capital, the kind of conditionality of lending, the kind of advice that they were getting for policy change. And then that spurred an interest in comparisons to other regions. So I ended up in Bulgaria, a country that also experienced tremendous economic institutional transformation from a post-socialist state to a liberal and democratic state, and went through a similar bank and currency crisis. So my own kind of personal questioning is kind of where I ended up in the world and looking at, how are policymakers going to adapt to this, and what are the constraints on their opportunity set, right, in terms of access to capital or just change. And that's still what I'm doing, basically. I'm just looking at different countries, different regions, and still asking very similar questions. But I think I've been really lucky in that I was in the right place at the right time. When I moved to the Gulf in 2008, it was a moment of also tremendous economic transformation and political transformation. And so I've been able to kind of ride that wave and study it. And quite frankly, I'll be really open. My colleagues in the Gulf who were working in universities or working in government as Gulf citizens didn't have the freedom to be as critical as I was. And so my career was really advantaged by being able to say things and write about things in op-eds and in academic outlets that citizens within the region couldn't say. And so there's a politics around that as well.
So my answer is probably a bit more domestic before I thought about geopolitics. And I remember when I was a child that I think in the 80s, and there may be a case study out there, that there were, I think it was GM trucks, right, were kind of like catching on fire in this story, right? So some of you may have read this. And so, my uncle had one of those trucks. And so I remember like that happening. And I think I was curious of like, how does that company respond to like that issue, right? Like that's clearly a crisis within. And so I think that sparked kind of my interest in political science, and then kind of marrying that with business. And then having done business, I think I always wanted to stay in that arena. And today my role is really helping clients kind of think about what are governments doing from a regulatory perspective, what are they doing from a policy perspective, and how do you as a company respond to those types of issues. I would say there's a bit of luck in my story as well. I'm not a Columbia grad. I'm a Fletcher grad. So at Tufts University in Boston for my international affairs degree, and a lot of my peers were doing that program to kind of figure out their pivot in the world, right? To what was next, and I sought to kind of marry my experience. Thought maybe I would go into government, maybe I would go into some sort of lobbying or advocacy, and I think this is 6 years ago, and I think I was a little bit at the right place, the right time. Where people knew at my firm that I was interested in this type of work. They knew I had gone to grad school. And I think someone had the foresight that, the period in kind of 2016 to 2018 was, I don't know if it was a defining moment, right? But I think it was a period where we started to see that we may not continue down the path of globalization the way in which we were going before, right? And that might shift. And so, we've been on this journey, and what I would say is I think this is timely that you're having this discussion, particularly around enterprise risk management, because particularly at EY, right, I think if I look back, 6 years ago, when you talk to some of our clients about what geopolitical risk meant, it was trade risk. And we were like, well, that's one, but it's certainly not all of the examples, right? And so I think we're seeing companies realize that they need to widen the aperture, and enterprise risk is part of that piece. It's one piece. But it's certainly a critical component of that. So maybe I'll stop there and we'll go to the next question.
It's great, thank you. So in terms of methodology that you use in your research and your approach, what the industry is doing, what sort of things they do to support their clients. Karen?
So if I think of clients, the people that I'm talking to or advising are the national intelligence community, the National Security Council, congressional commissions, people within the State Department. So that's a different audience than speaking to a CEO. And when you have state interest at the center and U.S. interest at the center, your advice and your kind of parameters are going to be really different. In the discipline of political science, which is my training, this is how it's always been done, is basically like asking levels of analysis. Are you starting with the individual, and then to the state, and then to the international system, and then maybe something a little bit broader, globalization, structural kind of issues at the very kind of umbrella of that? And political scientists, usually choose kind of where they're going to enter that framing. Sometimes they'll do a little bit of both or combine. We've had very famous scholars at Columbia who were focused on leadership psychology, including the dean at SIPA. That has been her background. And that matters, and we're learning that again, that we need to pay attention to the psychology of leaders. It can have really important consequences. Also in political science, one of the most famous IR theorists was Kenneth Waltz. And back in the late 1950s, he had this theory of the second image. So basically saying that domestic politics could often determine the behavior of states externally in their foreign policy. Basically like the democratic peace theory, like democracies are going to behave in certain ways and that's going to shape their interactions in the world. And then in the late 1970s, Peter Gurevich came around and he said, well, actually, it's the second image reversed. It can be the international arena, which can then shape domestic politics. And one example would be of globalization, really forcing China to open up more in terms of its trade policy and to make decisions based on those kind of bigger outside of the domestic sphere changes. And I think now most political scientists would say, well, we see these pressure points and tensions going both ways. And for example, second image reverse kind of theory, the idea of populism, right? These strong nationalist sentiments that we're seeing in the United States, also in Europe, comes in some people's view from a reaction to that period of globalization, right? And that it's a domestic reaction to something much larger that has been going on. So none of those frameworks are new or novel to geopolitical risk analysis. The way that we then operationalize our questions, we have a lot of different tools to do so. And like the discipline of political science has definitely leaned more in terms of the quantitative in the last 20 years or so. So we rely a lot on basically other people figuring out indexes, right? So let's put a number on a qualitative measure, whether that's a measure of freedom or corruption or transparency. And so those can be really useful tools. And then you can use, mathematical formulas or even game theory, which I know Bob has used, to figure out, predicting behavior. We also now can use AI and like supercomputing to like draw out hundreds of scenarios, right? And see what the probability risk of a state's behavior might be. So we have different ways of operationalizing essentially the theoretical methodologies that have been in political science for 1,000 years, right? But it's an imperfect science, right? And so any kind of modeling of decision-making at the individual leader level, at the state level, at the international system level, is going to have holes in it. And that's kind of, where the business of people who say they think they know the answers is really going to be unclear because, and this is something I think we all live and know and creates a tremendous amount of anxiety right now. There can be real U-turns and black swan events and the unexpected. So for a state, just as for a firm, you think about insulating around those possibilities and probabilities. And usually for the intelligence community, the defense community, the foreign policy community, you are creating strategies that are meant to help insulate and protect you. But that too can change, right? Sometimes the source of disruption can be the state or the leader itself.
Are you asking me to talk about that later? Or
No.
So I'm going to talk about this maybe at the firm level, right, of how we think about it. And we use at EY a term called geostrategy, which in our mind is kind of the integration of geopolitical risk into kind of a business's strategy or their operations in that. And the way that we think about it, right, is that, I think the title today is geopolitical risk, but we define, and this maybe isn't the academic term, right, but that political risk is kind of 4 types. So you have geopolitics, which is what we're here talking about today. There's country or political risk, right? Kind of what's happening within the country, so country political stability, which many of us are familiar with. Regulatory risk, right? Pretty clear in terms of kind of that, and societal. And I think to Bob, your opening comment, right? Like all of those interact with each other, right? They're feeding and kind of, and then there are events, that I think can supercharge all of those risks, which could be elections, they could be, other types of crises, right? A number of which that we're seeing. So, we think it's important to look at all of those, and clearly they do impact kind of your mirror image story, I think kind of fits that. So that's kind of, what we believe is important to look across. I would say it's probably not surprising that in, the last couple of years that geopolitical risk has probably been the issue that's of most concern to businesses. But that doesn't mean they can ignore kind of the others, right? Because they're intertwined in two. What we've seen is actually in terms of kind of some of the country level risk has actually risen, right? We've seen, the decline in kind of democratic institutions globally. We've seen, freedoms, whether that's freedom on the net, whether those types of things, these indexes that Karen was talking about, some of those decline, which means that companies have to operate in this, this different type of environment. So that's kind of the first framework that we use. The second, just to comment for a second, is that in the work that we see, and I'm sure there are a number of firms that you all know that kind of consult on geopolitical risk or political risk, or and there are boutique firms, big firms, et cetera. But we've seen that there's a lot of firms that do what we call a scan, that tell you what's happening in the world, right? So whether you have an analyst that's sitting in somewhere in Southeast Asia that's telling you what's happening in Indonesia at any given moment, and kind of the policies and regulations. We also see a lot of firms that help companies with their strategies, right? So, where should you be? How do you do that? How do you buy and sell a company? What should your supply chain look like? Historically, there haven't been a lot of firms that do what we call in the middle focus, which is understand, here's what's happening in the world, here's what it means for your business, and then here's what you should do about it. And I think that has been actually the challenge over the last couple of years with these changes in kind of the globalization that we've been seeing, is that companies can get data, right? They can get outside insights, but they don't necessarily know what to do with it, right? Like it's good, it's information, we can all have an intellectual conversation about it. But then what do I do tomorrow about my team that's sitting in X country, or where I should have my footprint? And then, or they have kind of strategy, but being able to bring all that together. And then it's a feedback loop, right? You need to continuously do this monitoring piece, right? You can't do that at a point in time piece. And part of that is what, Karen was talking about around scenarios, right? Like, what are the scenarios? And maybe the last thing I'll just say is that, as a maybe recovering type A person, right? When I came to this idea of scenario planning, it was like, you want to get the scenario right? You want like your scenario to be perfect. And I think, what we were learning in this environment is, right, the scenario doesn't need to be perfect, right? Your goal, or our goal as advisors, and your goal as people that sit in risk or some sort of function, right, is to help prepare the business for the things that can happen and to build the guardrails in so, they can either understand what's happening and take a plan that they had in place. But it's not necessarily get the scenario right. It's to have the capability and the capabilities and the knowledge to then be able to respond to it.
Okay, I mean, these are all very interesting ideas. The title is how do you navigate the geopolitical risk to shape the future, right? And it's really the active management of not just geopolitical risk, but we're talking about geopolitical risk now. And that's very important to prepare companies, organizations for what may come. So scenario analysis is a wonderful tool to use when you're facing, and you're always facing, an uncertain future, right? You don't know what the future is going to be. But if you are good at crafting scenarios, then you can bound the scenarios that you expect are most likely to occur. And this way you have a chance of actually dealing with the uncertainty. There are other econometric methods where two-stage stochastic analysis, for example, where you make decisions in stages, and that helps you, manage uncertainty. And to Karen's point about some people creating indices for measuring geopolitical risk, I came across 3 economists from the Fed, the Federal Reserve Board, who came up with the geopolitical index that goes back to 1900. And to the present. And it's an active sort of index. And of course, those of you who are interested in stochastic analysis, right, you can use that index to try to fit a most suitable distribution, and then may use that to make at least one prediction that you can put in your pocket and then use it as a base or a baseline or however. So in terms of, energy is a big deal. In terms of, if you were to analyze, let's say, the situation with energy and the transition, right? You talk in your write-up, you talk about transition. A political science analysis of managing energy in the transition, what would that?
That's supposed to be my day job. Yeah. It's very difficult right now because we are sort of still arguing about the outlook for energy demand, not just on oil and gas, but across all of the fuels. And that is really dependent on also a lot of unknowns. So, for example, if we see a deepening trade war conflict between the US and China, we would expect a slowdown in the Chinese economy, which means the most important customer for Middle East oil exports is going to reduce its demand for that product. That will have a ripple effect not just in the oil-producing countries of the Gulf or the Middle East, Iraq, but for all of the countries within the region which are heavily reliant on these states for remittance flows, for foreign aid, for investment. There are ways that I think about on a daily basis of just thinking about where is our energy demand picture going on the legacy fuels? What does that also mean when we think about the energy transition and a transition towards renewable power, whether that's in electric vehicles in China or how they're able to export to Europe or not the US. All of those kind of modeling efforts, there is tremendous variation from international organizations like the IEA and what OPEC says and what the oil majors say. So even on kind of the data collection point on the forward-looking kind of oil and gas demand point, we do not have a lot of agreement. Then add to that unknowns in industrial policy, unknowns in open conflict or maybe even kinetic conflict in the region, and it's really hard to model, right? It's really, really hard to know. One thing we do know, and I spend a lot of time studying Saudi Arabia, is how much governments are spending in terms of their fiscal policy, right? And so for governments that are really reliant on oil and gas exports to fund the business of running a state, this creates tremendous vulnerabilities at home as well. So we can pretty accurately say that like a break-even price in Saudi Arabia is somewhere in like the $90 to $100 a barrel range. But oil prices right now are in the 70s. So we can understand then what are government choices to deal with that. Basically, the answer is debt, right? But the geopolitical risk is not just in that one sector. It's in the possibility of conflict, the routes of trade, not just the state actors, but the non-state actors. The Houthis have shown us that very clearly, and in kind of the global economic outlook. And all of these things create just tremendous uncertainty. So that is what we do on a day-to-day basis. But I think everybody has an understanding that it's going to be quite imperfect. So you get announcements like trade tariffs that we've seen announced today. How then do you model or quantify what a 20% tariff on Chinese goods to the US means for Chinese oil demand? You can do that. There are people who are doing that right now. And then how do you extrapolate? Well, China is going to want some energy, some oil still, but they're going to want to be able to negotiate for lower prices. So what does that do in terms of your sanctions enforcement regime vis-a-vis Russia, vis-a-vis Iran? Those are also up in the air, right? So you've got just really, really difficult kind of variables there to deal with. But anyway, that's an example of the kind of risk analysis that I would be working on right now.
Great, thank you. I know we have a question here about you imagining what a black swan event might look like in 2025, which is this year. But can we talk about your sense of? I mean, I know Adam, you have selected the 10 top 10 geopolitical risks, right? And so if you can just give us some sense of what those might be.
Yeah, sure.
I mean, just high level.
High level, okay. So what Bob is referring to is that we released a report called our 2025 Geostrategic Outlook, which we've done for, I think, the last 5 or 6 years. And that our goal with that is to kind of, for businesses, lay out what we believe the key themes will be and some of the top issues that we believe are, one, most likely, or likely to happen in the year ahead, right? And two, that we will believe will be impactful kind of across all sectors. So we do kind of different sectoral cuts or industry cuts, but these issues are those that we believe will kind of be across industries. And so there are 3 themes that kind of arose, right, that I think are helpful. One is last year, you're probably familiar with this term, kind of the global election supercycle. So last year was kind of this year where I think, by our count, something like, countries representing about 60% of global GDP and 50% of the world's population had elections, which is massive, right? I mean, I think that's important to note. And so that means that all of those countries or all those jurisdictions are going to have policies, right, that they're making this year. So it's not just a U.S. story, this is a global story. So I think that's to keep in mind. The second theme, ties into kind of what Karen was talking about, of this idea of like kind of economic sovereignty and de-risking, right? So this is this idea of, we hear at a firm level, kind of I need to diversify my supply chain, or at a personal level, we need to diversify our portfolio. Governments are also saying we need to diversify where and how we buy goods, right? And this, if we go back to kind of COVID, right, there was this recognition of like, our PPE or ventilators are, coming from X country and we can't get those, or a certain amount of pharmaceuticals. But this is really continued, right? And we're seeing this not just on those products, but just, more broadly. And that's part of kind of the tariff and trade and non-tariff kind of policies that, the second Trump administration has said, particularly, right, in terms of kind of diversifying some of those pieces. So that's the second theme. And then the third is this idea of kind of just purely kind of geopolitical rivalries, right? And one of the issues that we talk about under geopolitical rivalries is kind of like the new geoenergy dynamics, which kind of ties into, and Karen's obviously a much bigger expert here, but I think just to share kind of how we're looking at it at a very macro level is that, when we think about kind of legacy industries, right, the U.S. and kind of the Middle East have this lion's share of those types of commodities, right? And so China is a key buyer. If you fast forward and look at, who has the resources for kind of this new energy economy, right? When we transition, and whatever word you want to use in terms of that, right? Yes, there are green kind of critical minerals, right? Whether we talk about nickel, lithium, all these types of things, even copper, right? They might be dispersed globally, but China's share of kind of the ability of refining, right, is upwards of 60% of kind of the ability to refine those. And in some of those minerals, it's upwards of like 90%. So you see, kind of, we just see, right, there are dependencies built into our system that we've allowed to be built because of globalization, and then kind of this is kind of a little bit of backlash or whiplash, if we will, right? Because I think governments and companies are saying like, oh wow, like we did that. Maybe that's not the best idea, right? We need to kind of reverse. And as we all know, right, large institutions don't turn on a dime, right? The aircraft carrier doesn't turn, in 3 seconds, right? And so that is driving, I think, a lot of kind of these major themes. And I'll just come back to, under that kind of economic competition and de-risking, we see so much activity there, right? I mean, the story with the tariffs in the U.S., right? The administration has said, one, they want to rebalance trade. Two, right, they want to kind of reshore and perhaps reindustrialize the U.S. And then third, there's this idea of reciprocity, right? So, if the tariff rate that you place on us is higher than the tariff rate that we have on you, we're going to raise ours, right? And all of that is about this kind of, in some ways, kind of rebalancing and seeking some sort of de-risking. And in some ways, governments are providing both carrots and sticks, right? And I think we're on for a ride in terms of kind of how that plays out. But I would say, I spend the balance of my time across all those three themes, but the balance is really with helping companies think about kind of the economic de-risking, because that is really what is driving them to shift their supply chains. It's really helping, like forcing them to think about their strategies, and it also is about the risk element too.
Great, thank you. So, so then let's talk about what you think an unthinkable might be for 2025.
You want to go the dark place. Okay, let's do it. So the thing that concerns me is it kind of gets back to actually a word that you used. If we think about stochastic kind of decision making or iterative processes, there is a sequencing issue of policy change that I think is super concerning in the direction that the U.S. government is headed right now. So there is something that people within the Trump administration speak of as a Fortress America kind of thesis, which is that we can onshore, we can be energy dominant, we can bring back manufacturing at home, that we can essentially have this kind of Western Hemisphere dominance and shut out the rest of the global economy. And Canada is part of that story, and dominating Canada is part of that story, as is the minerals of Greenland. But it's really about an at-home economy. If you make a policy choice with tariffs, with industrial policy, trade war, whatever, before you have the capacity to produce at home, even in agricultural production, right? Yes, we have tremendous farming in the United States, but we cannot subsist. I mean, you will not eat another piece of fruit if we had, that kind of border ceiling in a very, very fast way, right? It would take years to build up the avocado industry or, whatever, the strawberries that we get from South America. And so that really concerns me, that we have policymaking that is jumping 3 or 4 steps ahead without really understanding what the economic consequences of that look like. Not just in terms of when you go to Target next week, the plastic thing that you used to buy from China is going to be 25% more expensive, or 20%. But that there could come a time when we really don't have all of the pieces of the supply chains, from medical equipment to our agricultural products, to the making of big things, like things that require steel and aluminum, or even things that we need for the renewable energy system in terms of critical mineral processing. And you're absolutely right about that vulnerability. And that is a world that looks it's an America that looks very, very different. It's a world, and especially the impact on developing economies which are export dependent, looks very, very different. And it's honestly a world where you start thinking about, gosh, I should probably plant some potatoes in my backyard this summer. Like that kind of level of scariness. And so it is a black swan, but it's not really a black swan if the government planned it. They just didn't plan it well. So that is a worry. Another black swan that I do think about a good bit is more in oil markets, and I think that we're seeing a move that will probably mean a dissolution perhaps of OPEC and a real race for dominance of kind of our top 3 producers, and that's the United States, Russia, and Saudi Arabia. So we could see a world in which those 3 become aligned to push out other producers, to gain market share, to dominate what becomes of the industry. And that to me is a politically very, very dangerous alliance as well. Is that scary enough? Is that good?
There are drinks afterwards? So I don't know if this fits your definition, but one of the things, and I think this fits into the theme that Karen was talking about, is we did a set of scenarios looking at like just globalization, if you will, right? And so we looked at economic policy, so how liberal, like internationalist you were versus how nativist you were, and then just kind of global kind of economic, global relations, right? So are we in kind of broad kind of international geopolitical relations? Are we in more bloc-like kind of environment? And based on what we both just said, right, we're moving to the left, so from more internationalists to less, right, to more nativists, and we're moving from less globalization, less kind of global order to more kind of geopolitical bloc-like mentality, right? So like you were just saying, this scenario potentially kind of aligning with other countries. And as you do that, you move away from kind of globalization and you move towards what we've called kind of Cold War III like environment, or Cold War II like environment, right? You could also be kind of more self-sufficiency, which is in some of the terms of kind of having this fortress environment that Karen has suggested. And so my concern, right, or the idea there is that as you do that, markets become smaller and more friction in the system, right? Which means the environment, like if you're selling a widget, the market for you to sell that widget is smaller, and it's actually more difficult for you to sell the widget, right? And probably to make it. So less money at the top and higher revenue or higher cost line, so your margin is less. So to make that real, one of the last kind of announcements from the Biden administration was something called the connected car rule. Maybe some of you saw this. And the policy, which is still being formed, says that by 2027, no car sold in the United States can have kind of a connected or a system that has kind of Chinese technology in it, right? So we can maybe rationalize that's good, and I'm not going to judge whether that policy is right or wrong, but that's a big leap, right? If you think about it, I mean, I don't have a car, we're in New York, right? But if you do, right? I bet none of us have been in a car that doesn't have a component that was made in China or didn't have a chip or something like that, right? So that's a foundational shift in how cars are made. And as we all know, supply chains don't change overnight. So what we could end up with, right, is if the U.S. and other countries kind of take this approach to kind of have fortress, right, we could all have very nice markets that are protected, but they could be very small markets, right? And so are we limiting ourselves to kind of markets that become very well protected but are so small that actually we're hurting kind of our growth? And as we all look back over the last 70 years, right, the success of kind of our economies and the success of human existence, right, and kind of growth, right, has been dependent on the fact that kind of markets have grown. And so that to me is kind of the concern that I have, right, that we become so protected in this idea, but we kind of maybe lose the forest for the trees.
And that would be a bad thing.
It would.
Right? So given all this, right, now, you have a very bad scenario, and then you have a baseline scenario, and then you have some optimistic scenario, right? I think that those black swan things are, by definition, high impact but very low probability. And we've seen the administration say one thing and do another, back off things that don't seem to work by the view of many people that they trust. But in terms of, an executive committee or a board is asking for a decision, for some advice as to, so what do we do as a company, as an organization, whether it's for-profit, non-profit, government agency. So what would be, given this uncertain environment and given the scenarios, what would be some, let's say, best case advice that they can actually do something with?
Well, you should go first. You do this every day, right? So.
I mean, at a company level, right? I mean, I kind of talked about this a little bit of information, right? You have to kind of have, outside-in information and gather that. But not only that, you have to have kind of a process in place to digest it and understand what it means for your organization. And so we see, clients that have set up, whether it's geopolitical risk committees, right, or in a few cases we've seen clients, appoint kind of a chief geopolitical risk officer, which isn't something that we saw a while ago, and that may have been more typical in financial services, like a lot of the banks, but we've seen actually kind of non-financial services companies do that. So I think it's information, it's the governance structure, like how are you processing that through the system. We talked about scenarios, right? How are you developing those? And we just had a session today with about 24 executives, and a number of them were kind of risk leaders at kind of large companies that we would all know. And it was educating the board, right? And how was the board getting information, and how was that happening? On the flip side of that, right, is advocacy, right? Which is something we as a firm don't do, but we do advise our clients, right? That they need to be in front of, the administration, not just the U.S. administration, but saying how do these policies impact you, and kind of doing that type of lobbying and that type of advocacy to represent them. And then I guess lastly, I'll just say, right, this is, I think, playing the long game, right? But the diversification story is real, and we do see companies moving in that direction. So I think bringing that together. And sorry, just one last thing I would just say is that our conversation, I think, thus far has been around geopolitical risk. And there is risk, but I would say, right, there is opportunity here too, right? I mean, the thing that keeps me kind of not being depressed, right, is the fact that companies want to do business in other countries, and companies want to do business here. And so I think opportunities do come out of that, but it's those companies that are most prepared, right, or have kind of the governance, have the information, that can then know where the risk tolerance is, and whether they can, go into a country that maybe isn't favored by others. So I do think there's an opportunity component that we shouldn't miss.
Yeah. I think for governments, I would say, again, use the metrics that are available to you, and I think markets are the best one right now. I mean, here's an example. Just this week, we saw a huge kind of lift in the German stock market, because there was a sense that Europe would be spending more money on defense, and European defense companies, all of a sudden the stocks were gaining and gaining and gaining. And that was, I think, a very healthy indicator of the direction of where policy was going, and kind of reading the tea leaves of U.S. support for Ukraine, and the market saying, okay, here's an opportunity, right? We're gonna feed this and help it along. It can also be in the other direction. There was a colleague of mine, interesting report, who raised the Atlanta Fed released some data this week that showed kind of month-on-month decrease in GDP was the fastest decline it's been really since 2008 global financial crisis. That's a very strong indicator, right? That tells you that in the first quarter of this year that there was a reaction, right? And companies certainly are going to pay attention to that, but governments also need to pay attention. So whether it's your local government, state government, or certainly at the federal level, that the policy choices are creating waves. And certainly politicians are very sensitive to that. And I think we will see more and more inflation as a metric of policy success or failure. So, pay mind to those things.
Yeah, it's interesting because the same Fed economists who came up with a geopolitical risk index did a study in 2024. They found that geopolitical risks basically can cause inflation, shrinkage of GDP. In terms of the idea of diffusion, the innovation pace getting slowed down, which affects, growth rate in the outer future. So it doesn't look like a good thing for any state if you look at the numbers and the study and the empirical work. So, there are costs to geopolitical risk. So it would be in the vested interest of states, one would think, to tamp it down find other ways to negotiate. Yeah, I mean, the world had a terrific run since, after the Second World War in terms of growth. I mean, all the metrics were just, positive by and large. So to go back to a situation where, the dissolution of the Pax Romana resulted in a broken up system of isolated kingdoms.
Yeah.
That's not a good example to emulate. So the research shows that the geopolitical risk causes more harm than good to people who participate in it. So and maybe some governance from the Security Council of the UN, so that the 5 permanent members find ways to cooperate instead of some defecting. That would help some of the problems that may prop up. So that's an optimistic view on my part. Well, thank you all very much, and thank you,
Yeah.
panelists, for being here.